Okay, everybody, welcome back to another episode with your host, Real Trader Joe. It is 8/21/2024, and the market is off to a hot start. Palo Alto down $2, and you hear my glowing white shirt. People had to take some profit. People had to just leave after that massive rise yesterday. So I'm not at all surprised. And as a matter of fact, in today's episode, I'm going to be talking about whether or not it's time to take this guy off. You know. Portfolio management is a big part of trading successfully, and the reason I've got all this red on my screen here is partially just because we let our losers go, and I might have let some losers go too far, and possibly letting Palo Alto linger on the table in terms of capital allocation. Maybe not the best move, so let's take a look. I know you can't see the portfolio allocation, but right now I'm at about 72% buying power. Now for that VIX spike back at the beginning of the month, that was fine, but we need to start looking at how to unwind some positions, because 72% usage is a lot. That means, if the market goes down like it did and buying power requirements expand, I may not necessarily be able to hold on to all of my positions when the time comes, or if the time comes, that the margin requirements increase. But first, let's go ahead and take a look at the overall market. The VIX back up to 16 hasn't quite fully unwound from its, July ramp up here. You can see July 19th, the VIX is actually at about 16, 17, so we're getting back to just about July levels here, mid-July. But of course, in June, the VIX is at 13, so it still has a ways to go before it hits historical levels. May do an episode on the VIX here in the future, but NQES slightly positive, essentially flat, no movement today really. Qs, so we discussed QQQ yesterday. We rolled this untested side to this 459. We had a 420 that we rolled up to the 459 strike, collected ourselves some extra credit, and just looking to sit on this guy. If QQQ breaches our break even of 483, then we'll continue rolling the untested side. We still have a lot of room left on this put if we want to roll him. So, just to show you what it would look like if we turn this into a straddle, that's an additional $5 in credit and 1 theta. That's a lot. So plenty of moves we could make to make sure this guy's profitable. Not sweating him too much. Just on the edge of that 483 break even, and we're going to sit tight. The rest of the portfolio, not really a whole lot else going on. Pretty quiet day. Dell and Micron, pretty much right where we need them to be. Micron is in that really tight range of 105, 110. And again, as I talked about yesterday, with Dell and Micron, we're just looking to get out clean here. Tesla, I consider a bit of a different ball of wax. I rolled that out into a leap with the expectation that Tesla at some point falls to 135 and that I can buy it. But yeah, we are showing a big loss on that order chain as well. So Dell and Micron, damage control. Coinbase, we were just directionally wrong. But that's fine because we're really pumping the brakes on that $21 there. Really getting that cost basis down with these short puts here helping us out. So still, some positive theta there, but this 185 is really going to decay quickly. Having paid $21, that could be worth nothing here in the next couple days. So I would expect all the value to get squeezed out of this 165, put our cost basis at about 16, and then we've got about $5, so our cost basis there 16, 17, reduced to about 11 or 12. Being real rough with the numbers here, but just a quick little overview. And look at this, Palo Alto. Now down 5. So that 370 call is now out of the money. We're no longer obligated to give our shares up for an in-the-money strike. We are still obligated to give them up at 370. But if somebody wants to have me sell them Palo Alto at 370 with it marking at 361.94, I will happily sell them Palo Alto at $9 or so, higher than market price. So that's why that option's out of the money, right? We're obligated to give our shares away at a price higher than what the market's willing to pay for them. So that's why that ITM sign is no longer there. But looking at our portfolio allocation, I've been nervous about it for a while. That VIX spike gave me some good reason to ramp up allocation, but 70% is a lot. And CrowdStrike here, you know, IB rank of 68. Earnings are going to be in just a few days. We're in the 58-day cycle, so we're outside of the theta curve. I think there's some better use for this money, and I usually will do my best to stick to profit targets or profit velocities. But I think, you know, I don't want to hold this trade going into earnings, so we are going to look to take this guy off. If not now, probably at some point before earnings. I'm tempted to do it now, and I actually want to see what the Tasty Trade research says about this, because as you get closer to earnings, you have an increased volatility spike, right? So you've got pretty much the volatility of the cycles behind earnings, behind August 28th, they're going to continue to increase, and we're going to feel that in our 58 data expiration position. So, I say all that to say, you know, if we close this guy down, we're going to reclaim about $2,000 in buying power, which is not insignificant, and it would help us with our allocation. I also think, even if we are over-allocated, we might be able to repurpose that into some bullish deltas and maybe give ourselves a little nudge in the right direction here. The Q's, you know, creeping up to that 483. It may hit 483 by the time we end the show. But, yeah, I'm totally fine to roll these out. October, I want to try and avoid November, because November is the election cycle, and you can see the IB elevated here slightly. But, I think the Qs are going to be in a good position. I mean, we can even just do this. We can just widen it out. See, look at that. We can reclaim buying power this way, too. We don't always have to close stuff. We can roll it out. But if we roll this out, we are sacrificing a significant amount of theta, and we want to make sure theta can do all the work it can before we have to say goodbye and reset it. So, gonna sit tight, but if we do hit 483.30 approximately, actually probably a little less than that because we're 20 cents, so 483.10, then you will see me roll this guy out, because that's the way the mechanics are supposed to work. You can see this short put here really soaking up some of the damage, but I think we also have an IB rank increase. So that short put really just directionally not going our way. I'm kind of a perma bear. Anytime I see blood in the water, I hope it'll continue. And it didn't. You know, we saw this rally sort of back to these levels here. So the damage on our portfolio could have been a lot worse. AMD pretty much flat, and flat is okay. When you got, you know, when you're short the options contract, you've got positive theta, you've got negative vega, you want the market to go nowhere. And I'm pretty much happy to see a day where nothing goes on, because we are just collecting this theta. Look at this, 33 theta on the Qs, 31 theta on AMD, 23 theta on ARM. That's all money in our pocket every day. And by money in our pocket, what I mean is that the value of these options contracts will decrease by theta on a daily basis. And we want the options contract to be less than what we sold it for, or we want the value of the contract to be less than what we sold it for. So, every day that passes is good for us. And I am really tempted to take this this Palo Alto ratio off, call it a day on this 370 call. But I think, you know what, given how far down we are in the order chain and our bullish deltas, that we're going to leave Palo Alto on for now. We're going to give ourselves a little bit more room to the upside, and then, you know, September, October rolls around, we can reevaluate. But right now we have this covered call really helping us out with the exposure here, and I want to make sure that we can get our value out of this guy. If we close the position right now, we are taking the full value of the ratio spread at about $5,000, but we're also just eating the loss on a call that's not even in the money. So I want to give that guy a chance to expire and get out clean with our spread. Now that said, just some of the things that are on the radar with being over allocated, we want to look to unwind positions that we can unwind. So, you know, I don't know that I'm going to close anything on the show today. I'm very tempted to close out CrowdStrike here, just for all the reasons I mentioned. But we are going to probably be closing CrowdStrike. I almost said CloudStrike. That'd be a name. That'd be a hell of a name for a company, right? It'd be like Link's Paradise, like CloudStrike or something. There was Cloudflare. or cloud flare. So I guess a flare is kind of a strike. I don't know. Anyway, yeah, so CrowdStrike. The other thing to consider with this position is that we did roll defensively here. That 200 strike, you know, it did. The 210 actually got tested, and then we rolled to a 200. So that was a defensive roll. That's the other consideration. So, you know, as I'm talking myself through it, I will go ahead and close this guy out with the understanding that we had rolled defensively and we were tested. So there we go. We're out of CrowdStrike. And now we have a couple of different options. We can either, you know, repurpose that capital, or we can sit tight. And I think, you know, for all the reasons I mentioned, we are overallocated currently. But I think it would be wise to maybe get, you know, some capital on the sidelines here. We just saw a huge rally in the Qs. I mean, this is the daily chart. We pretty much went right back up, and it looks like we are encountering some friction here at this level. So this could be a sort of lower high, and we may be headed lower. If that's the case, I'd like to just take my profit where I can get it. And you know what, if the Qs have some retracement to do, if they're going to go down, that's good for us, as long as they don't go down too far. So, with all that said, I don't think I'm going to place any new trades today. But I really am just looking to unwind some of these trades. This silver trade we've had on for a really long time. AMD, we have quite a bit of capital tied up in, but it's because we have these short puts, and 30 days to go is kind of the sweet spot. It's between 45 and 21, so with 30 days to go, you'll really start to see some of the value come out of these. If we just do a quick analysis here. So in theory, we're profitable. It's not quite the case because that 165 call is worth a lot. And of course on the 135 that we originally rolled out with, we're profitable. But this trade has been a marathon, and anywhere between 135 and 165, we're going to be okay. So if you look at the expiration here, you'll notice our profit, it decreases significantly past that 145 strike because we are then obligated to buy 100 shares of AMD. But our cost basis overall, if we just go to the order chain and we add it up, is, let's make sure that our close position is 832. Wow. So that's $8 approximately past our short strikes. Not exactly, because, you know, like I said, we are going to have two short puts here, and that kind of muddies the waters a little bit with respect to profitability, but still, I mean, 165, you know, plus 8, not exactly accurate on this order chain here, but 175, that's right inside the standard deviation for 16 days. And we are not going to be in this trade for 16 days. We're either going to be rolling or closing by the time we hit 21 days to go. So all this looks grim right now. I mean, there's a lot of red here, but there's also a lot of time decay going in our favor. And statistically, you're expected to capture about 25% of the time decay in the portfolio. So the losers look bad. You know, the losers always look bad. None of the portfolio really at any given time are winners, because if they're winners, I take them and leave, you know. So everything that's left over is stuff that either hasn't gone my way yet, that is losing, or that I'm defending. So quite a few in the money positions right now. Good percentage of the portfolio. Palo Alto in the money for the better. But and then VST, of course, best case scenario, right between our short strikes. And look at this, 534, and you know, 9 theta a day. So really starting to chip away here at the cost basis on this position. But yeah, I mean, what a marathon this has been. We got long up here. We endured all this price action. I mean, it got all the way down to 71, and we were obligated to buy it at 87 originally, 87.5 to 71, and now back up and flattening out. So really, I think we've endured the volatility quite well, all things considered, for it to end up where we needed to. The catch is that we needed to stay that way for about 55 days. But again, that's short theta for you. That's really all it comes down to, is just collecting the time decay and you know, doing our best to just fade the storm. So trades on my radar. I've been looking at the crude oil futures. It looks like we are getting kind of clobbered on crude, so I may get bullish crude oil in the form of the XOP. XOP is the sort of the ETF that tracks oil and gas. And it looks like, I mean, we did get a bit of a rally here, but I may go bullish XOP. See how much capital that takes. Yeah, it's about 10%. So that's about what we closed out on CrowdStrike. Bitcoin, of course, down for the day. Coinbase pretty much following suit here. So, another crash in Bitcoin would be good for us, but the VIX is also up, which is interesting. You typically don't see volatility up. Volatility usually has an inverse correlation to ES and Q. So generally, and not always, but generally, if you've got the futures up, volatility will be down. But, of course, that's not always the case. And today, here, we do see volatility increasing slightly. So that's another reason I'm hesitant to place trades. It's not a Friday where you'd expect volatility to go down. We'll see what happens. But other than that, I don't have too much else. We'll go ahead and end the show early today because I don't have any trades. Just a nice overview and some of the things that I'm looking at going into the weekend. If you guys have anything that you want to see or topics you'd like me to cover, questions about options, you can always send me an email, traderjoeguru@gmail.com.